Hey, welcome to the Chapter 25 problem assignment homework help. I'm nestled in here with my peanut M&Ms. I'm ready to go. All I lack is a Dr. Pepper. An opportunity cost is potential benefit lost by taking a specific action instead of alternative actions. Is an unavoidable cost because it remains the same regardless of alternative chosen? No. Requires a future outlay of cash? No. Past managerial decisions, it sounds like a sunk cost. Is irrelevant decision? Nope. I'm just giving you guys one here. Yeah, there you go. All right. I don't know how many multiple choice I have for you. All right, we're going to identify whether or not these are relevant or non-relevant. Helix Company is approached by a new customer to provide 1,580 units, 1,580 units of its product at a special price of $8 per unit. Normal selling price is $10. Helix is operating at 80% of its capacity of 10,400 units. No incremental fixed overhead will be incurred because of this order. Also, there'll be no incremental fixed general and admin costs because of this order. All right. Now, I'm just curious here. It says we're operating at 80% of its capacity of 10,400. All right. So we can do this. It's within our capacity. Okay, so we can definitely do this. All right, is the selling price of $8 per unit relevant? I'd say it's relevant. Direct materials of $2, direct labor of $3, variable overhead of $250. Yeah, I think all those are relevant. What's not relevant was they said that this fixed overhead, because it's not going to be changed, it's not impacted. So that's my guess. Let's see if I'm right. Hot dog. Remember, they said that no incremental fixed overhead will be incurred and no fixed general administrative costs. So that's why these are not relevant, because it's not going to be impacted based on this order. All right. I'll stop eating my peanut M&Ms. Sorry. They're just so good. Haver Company currently pays an outside supplier $27 per unit for a part for one of its products. Haver is considering two alternative methods of making the part. Method one for making the part would require direct materials of $11 per unit, direct labor of $14 per unit, and incremental overhead of $3 per unit. Method two for making the part would require $11 per unit, $8 for direct labor, and $7 for overhead. All right, well, let's do all the relevant costs, all right? So right now, this is the buy. Or we're buying it at $27. So if either one of these is cheaper, we want to make sure we're doing it. So we're going to look for direct materials, labor, and incremental overhead. Oh, cost to buy. You know which one you want cost to buy because it's the last one listed there. That's why we're going to put it there. Direct materials, direct labor, and the incremental overhead. So that's what we're looking for. So so this one's 27. Method one is 11, 14, and 3. Okay, probably not going to go with that choice. It's too high. And then the method two is going to be 11, 8, and 7. Okay, it looks like we're going to go with method two. Should Halver make or buy the part? We should make it. And method two. It's very simple. Method two is the cheaper of the three options, so we want to do that one. That's why I picked it. All right, Hit Manufacturing produces denim clothing. This year it produced 3,360 denim jackets at a cost of 100,800. These jackets were damaged in the warehouse during storage. Uh-oh. Management identified 3 alternatives for these jackets. We can either sell it as scrap, we can disassemble it and sold to recyclers, or we can rework it, turn them into good jackets, and the reworking jackets has a cost, but then can be sold for 151,000. So let's look at this. Compute the income for each alternative. So if we scrap it, revenue is going to be 20,160. Costs are going to be 0. We recycle it. We're going to have 40,320 at a cost of 6,720. And my guess is that's going to be the one we were going to want. Rework will be the 151,200, and then the cost was 114,240. Oh, I was wrong. It's rework. I was just spitballing the numbers in my head. So we want to rework. Why, you ask, do we not consider this $100,800? Listen, from an accounting standpoint, we're taking a loss on these regardless of which decision we make, because we will factor this in when we make the decision of whether or not this was a loss or a gain. But whether or not to scrap, recycle, or rework, those costs were already incurred prior to the damage. And so to make our decision, those costs are irrelevant. They're sunk. They've already been incurred. So we don't care about this $100,800. We care about it when we record the sale of these, because we're going to credit our revenue, debit all of our costs here. As well, these are going to be costs that are going to be capitalized in inventory, and so therefore we're going to be debiting cost of goods sold. But it's not going to just be this 114,240. We're going to add it to this, and then we're going to be debiting a loss on that transaction. Okay. So, having said that, those costs are irrelevant, though, to whether or not we should do it, because we want to find out which one's going to pretty much give us the lowest loss amount that we can get. So we're going to take this 36,960, which is going to give us the most out of this decision. There you go. I just ate another peanut M&M. Sorry, shouldn't do that. All right, Edge Company produces 2 models of its product with the same machine. The machine has a capacity of 162 hours per month. The following information is available. Here it is. Remember, we did something very similar to this in the lecture. This time, our maximum number unit of sales, okay, it's 550. Our contribution margin is 105, so we're going to take this. $105 is our contribution per hour, because it's only 1. We got to divide this by 2 to get to our per hour contribution margin. So contribution margin per unit for the standard is 105, 84, and then we're going to have machine hours of 1 and 2. Contribution margin per is going to be 105, and this one's going to be 42. I took 84 and divided it by 2. Just double check and make sure we're on the right track. We are. Let's keep going. Hours dedicated to the production of each product, okay? Oh, how many units of each model should the company produce? How much total contribution margin does this mix produce per month? Well, let's come back up here. The maximum number of units we can sell is 550. So what is our maximum here? Hours dedicated to the production of each product, 550. This one is, oh, excuse me, no, this is 1 and this is 2. 550, and this one is 200. Contribution margin per unit, there you go. Let's add those together. Let me open up my calculator. 57,750 plus 16,800. 74,550. Let's check our work, make sure I did that right. Nope, I didn't do anything right. Hours dedicated to the production of each product. See, I was wondering if this wasn't something, hours dedicated, units produced for most profitable sales mix. Let's try it this way. Hours dedicated to the production of each product. Oh, 162 hours per month. I missed that. See, so I got to read the whole the whole thing, right? Machine has a capacity of 162 hours. That changes everything. We can't produce the maximum number of units in all these. So hours dedicated, and so it probably means 162 because we don't we want to try and make the one that has the most capacity. And since it's a 1 hour deal, we can take all the hours and only make the standard. So let's make 162 of those, 0 of those. So this should just be 17010. I'm thinking that's the right way. Let's check this out. So what I've done is basically I took the total number of hours and dedicated all to our standard because it's our biggest profitable unit. Ah, there it is. There it is. Okay. All right. That makes more sense. Okay. Okay, so now down here, we're gonna change things up. Instead of 550 units, we're gonna have a maximum of 8 units. So, or 80 units. So we're gonna have standard is gonna be 80, and then the deluxe is gonna be the difference between, what is that, 82, I think? 82 hours. Let's take that. I just want to make sure I don't do mental math, especially when I'm talking very well. Units produced for the most sales mix. So we're going to get 80 units there. And the reason for that is because it's per hour is 1 per hour. Here it's 2 hours. So what we're going to do in order to calculate the number of units is we got to take 82 and divide that by 2. We're going to make 41 units here. And so our sales mix here is going to give us 8,400 plus 3,440. 444, sorry. 11,844. 11,844. All right, and so let's check our work there, and I think we should be good now that I kind of figured out what they're trying to say there. All right, perfect. And remember, when you're looking at this from the standpoint of our best contribution versus our worst, these ones are our parameters. So if you calculated with a reduced sales mix that's not just our standard and got more here than the total contribution margin by just doing our most lucrative product, then you did something wrong. Okay. Think of it like in the terms of the FIFO LIFO stuff we had a discussion in Accounting 111, where in a period of steadily rising costs, our FIFO inventory is going to have the smallest net income, whereas LIFO is going to be the highest net income, or excuse me, the other way around. FIFO is going to have the highest net income, LIFO is the lowest net income, and all other methods will be somewhere in between. That's the concept here. Think of standard as the FIFO and deluxe as the LIFO, and any other sales mix should fall in between that amount, okay? That's what I'm trying to say here, because if all we did was produce the deluxe, then we would have, let me show you that actually. If all we did was produce the deluxe and we devoted 162 hours to that, we could only make 162 divided by 281 units. All right, and then that would give us 6,804. So 6,804 and 17,010 are our parameters. This one being our most lucrative, this one being our least lucrative. Okay. And so with the sales mix of anything else should fall between these two parameters. That's what I'm trying to say. So now instead here we're doing 80. We're doing 82 hours. We did 80 units, and this one was 41 units. So that's where it was at. And then we added those together to get 11,844. I don't even remember. Did I check my work on this? Yeah, I did. Okay. All right. Next problem is TechCom is designing a new smartphone. Each unit of this new phone will require $233 of direct materials, 13 of direct labor, 26 of overhead, 21 of variable selling general administrative costs, 34 of fixed overhead costs, and $13 of fixed selling general and administrative costs. Okay. Compute the selling price per unit. The company uses the total cost method and plans a markup of 170% of total costs. Okay. So our total cost per unit is we're going to need to add up our, well, I want to see if they're not giving us, I was hoping they're going to give us that spreadsheet to work with that we did in the lecture, that we looked at in the lecture. So we're going to need to add up all of our direct, get our variable and fixed costs per unit. 233, 13, 26, 21, $293 of variable costs, and the 34 and the 13, $340 total cost. And I'm just gonna check my work because I want to make sure I got that right. Yep, okay, good. And then we're gonna need 170% markup. So let's multiply this by 1.7. So 578 minus 340. So our markup should be $238. And our selling price will be 578. Actually, that might not be right. Yeah, I did that wrong. I just realized that. So what we need to do is the markup itself is going to be 578. And 918. So when I calculated the 170% markup, it means the markup is going to be 170% of this total cost. So that's the amount of the markup, not the selling price and then the difference is marked. That's what I did. And this is correct. This is what I should have done. So 340 times 1.7 is going to get you 578. That 578 is a total markup. And then you add the two together to get selling price. So I did that wrong. Okay. The company is a price taker, meaning that whatever is out there, they're going to take. And the expected selling price for this type of phone is $830 per unit. Compute the target cost per unit if the company's target profit is 70% of expected sales. All right, we're going to take that $830 per unit and we're going to multiply that by 0.7 for $581. So that's our target of profit. So our total costs have to be 830 minus 581, $249. Okay. I took 830 multiplied by 0.7. That's going to give me what the target cost or the target income or profit for the company is going to be per unit. And then we're going to subtract 830 minus the result of that and get 249. The other way we could have done that is just take 830 and multiply it by 0.3, which would have gotten us the same number. 0.3 is the amount of cost. If 70% is what we want in profit, then 30% is going to be the cost. And so we could have done that too. Compute the selling, let me go back to it. Compute the selling price per unit. The company uses the variable cost method and plans a markup of 200% of variable costs. So total variable costs. Now we're going to exclude our fixed costs. Like accountants, we don't come up with clever names. Okay, so $293 complement our variable costs. Direct materials is variable, direct labor is variable, 26 is variable overhead, 21 is variable selling and overhead. Okay, we have fixed overhead and fixed selling and we're not dealing with those. $293, 293. We want 200% of variable costs. We're going to take this and multiply it by 2. 586. So our expected selling price is going to be $879. Yay! Complete and correct. Okay. So we took variable costs, we added up all the variable costs that said were variable up here, added them, put them here. Multiplied this by 200% or 2 to get us what the markup is. Added those together to get us our selling price. And for our last problem, I don't have a segment one on this. What did I do? What was I smoking when I put this assignment together? I should have had a segment one. Oh, I thought this said underwear maker markers. I'm like, what is an underwear marker? Underwater markers. I have no idea what that is. Underwater markers. What would you use underwater markers for? Diving, maybe? I have no idea. So potential customer offers to buy 60,000 for $3 each. Okay, we're normally selling these puppies at $6. Our income is $3. My guess is just spitballing. This isn't going to be something we're going to want to do. Direct labor costs would be 45 because of overtime, which means we probably have capacity but not enough employees. So there's where we're going to have a problem. Accepting the offer would require incremental fixed general administrative costs of $6,000. We're got to be rejecting this one. Compute the income from the special offer. So sales 60,000 times 3. Um, 60,000 times 3 is 180,000, right? Let me just check that really quick. I don't want to be wrong on the first one, and I am. That's why I just mental math with me is never good, and I'm telling you guys, don't do it. All right. So 60,000 times 3 is 180. Wait a minute. Why is that wrong? Oh, because that's supposed to be per unit. That's total. There we go. Better. Okay. So sales, and then this should be variable costs. We're going to list that here. Basically, you're just copying what's up there. All right, except for the fact that so direct materials, just going down to contribution margin. Oh, there it is. Okay. Um, direct materials, direct labor. I'm telling you guys, we're not going to do this. I just don't feel like this is variable overhead. What's the last one? Contribution margins right there. So it looks like we don't need to add anything there. Yeah. All right. So we're gonna have $100.54 for the materials, but 45 for the overtime. So 154 and 45. Okay, and remember we're selling 60,000 units. So let's take those and multiply them by 60,000. 1.54. So we got 92.4. You know, I take it back. We might do this anyway because if we have the excess capacity, even though we're going to be making less, we may still do it. 7,000. But if we have unlimited demand, then we won't because it'll be too cheap. Not change. Okay, that's what I was looking for. Variable overhead, so it's 0.7. 42,000. Fixed overhead, our fixed general administrative costs. Fixed overhead is the same, so 0.2. $12,000. With incremental fixed administrative cost of $6,000. Okay, so we're gonna come over here. We're gonna put $6,000 here. Dude, look, 600 bucks. This, in my opinion, this isn't worth it. But you know, some places will do it just to make the relationship. 600,000 divided by 60,000 units, so it's gonna be 1.1. mean, we're making peanuts on this, if my numbers are correct. I mean, we're really making numbers. Oh, what did I do wrong here? Fixed overhead? Oh, I'm sorry. Yeah, fixed overhead will be zero because we're not incurring any extra costs. So that should be zero. All right, so maybe it's a little better now that I look at it from that standpoint. Um, I don't know, $12,600. You normally make $3 a pop, and now you're only making 21 cents a pop. I don't know. I don't know. Yes, we should accept the offer because you can make a buck or two. I don't know. I'd reject it maybe because it's just not within our. Where am I missing? It says it's not complete. Hmm. Sales. Oh, see, look at this. What do I need to put here? Maybe no. There's nothing there. Fixed. Fixed. Income tax savings, variable overhead. There's nothing there I want. Oh, it's because it wants me to put this here. Sometimes that's what you got to look for. What is it that you're missing? Get it complete. They ding you for that. They ding you for that. So anyway, hey, I might be adding a segment elimination question to this. Um, I do go over it in the lecture, so I don't know why I didn't have a problem in here for that. That one's pretty important. So, but anyway, hey, that's it for this homework.
I don't understand.
Google. Google doesn't know anything. They keep hearing me and they think I'm talking to her. Anyway, guys, that's it for chapter 25 homework. If you guys have any questions, let me know. Good luck on all your homework and stuff. We're getting close to the end of the semester here, no matter which semester you're in, because then you get to chapter 26, you're at the end of the semester. So anyway, let me know if you have any questions. I'm here for you guys, and take care, and we'll see you in the next video.